Give this a second to start loading, guys. Anybody looking at Simplicity or looking at any trades here in the last couple of days? Ooh. Anybody at all? There we go. Mute that. Thumb up that. Get this out of the way. So welcome everyone to the Super Easy Beginners Call. So if you guys don't know who I am, I probably should put my bio on this, but that would be long, so I'm not gonna. But anyways, I am just a super easy coach along with the company. We kind of go using this reversal system and look for some trades. So disclaimer, don't trade what you can't afford to lose. It sounds pretty self-explanatory because it is. If you cannot handle the drawdown or what comes with trading and the pullbacks, if you can't afford the money you put in your account to be potentially lost to the market makers and the market beasts that will be, then please don't use live money. Use demo money. So as anybody who's worked with me for longer than 2.5 seconds, we all know that this is kind of where I find my peace. I find my comfort. This kind of thing comes up on the screen and I'm like, yeah, I get that, right? Because trading is as easy as you make it. So once you get your strategy down, you get any kind of strategy you can duplicate, you can literally compound your money. You can literally duplicate your efforts penny by penny, dollar by dollar. We're not pitching the moon and the stars, but in reasonably short amount of times with the failures, with the losses, with the bad days that come with it. So that's my lovely kind of, this is actually what's possible. When no one believes you that yes, you can double a penny every day for 31 days to 10 million. But when you see it written out, you're like, huh, oh, I get it. And the more you see this, the more you'll truly understand the purpose of compounding. So last but not least, how to compound to 5, 6, and even 7-figure withdrawals. This looks elementary because legit it is. But what if you could find your strategy? And it doesn't have to be just this one we're going to show tonight or just mine or so and so's. It really comes down to creating a strategy that your eyes see really, really well, and then sticking with it long enough, tweaking, adjusting, and simply compounding those efforts, those skills, your account, the leverage, the whole nine across the board. So that's all I'm going to share on that. I'm going to hit stop share. Let's see. Make sure this other broker is closed down before I pull up this other thing. Did anybody catch some of those pips on the call this morning? Please tell me somebody got some of those massive amount of pips, because that's pretty awesome. I'm going to come here. Okay, so pull up my chat, make sure I can see everything too. No, you're okay, Melanie. I promise you're good. All right, so guys, you'll notice, first of all, the next couple of pairs I'm getting ready to go over, none of them are USD based because the US dollar is doing its own thing. It's, said to be dropping. It is dropping in value. It can afford a pullback, but right now we don't have any indication that we're going to get a strong enough one that's worth kind of looking for a potential reversal on the weakness that we're seeing in the US dollar. So we can definitely go through all this and look at the pairs. If you guys have pairs you want to look at, please put them in the chat or unmute yourself, because that makes this way funner. Let's see, I'll pull up if it will let me. Please excuse the background noise. I've got some hoodlum boys here with my oldest son. They're working on cars and all eating, leftover spaghetti. So you can hear them outside my office window. So anyhow, Australian US dollar, all the USD pairs, really, they're all doing kind of comparable things. They're sitting at really interesting levels, and none of them are showing any potential reversal system coming up. And remember, Simplicity is a reversal based system. So we're not seeing any long-term potential. We caught like 10 pips here earlier this morning. Nothing measurable, obviously. We're just kind of coming back to, previous highs. We would need an intense momentum move. We would need a breakout and a correction before we really consider this to be potentially selling. And that really goes for, well, all of the USD pairs. So none of them are looking rather attractive or like potentially good entries, with the exception of USD CAD. This I am waiting for, but even on 1 hour time frame, we don't have a confirmation yet. When I get a confirmation, even on my golden strategy or using Simplicity, I will take this trade. But as of right now, we don't have one. So if we wanted to consider this a potential setup with a maybe baby situation, sorry, I'd be looking for the break of this fractal. Once we broke this fractal, then I'm saying, okay, we're going for literally just a measured move from the break of this fractal. It's 67 pips up, not a fast mover, but that's a 1-to-1 risk to reward ratio. And of course, if we break this zone, we're looking to kind of go up to about 120 pips. Not a bad trade whatsoever, but we need confirmation. So I'm personally not taking this trade. I won't even go to bed and put a pending order on it. Again, primarily because what we're seeing with the US dollar right now, it's just not a great time to be for me to put like, hey, I can't see this. I'm going to leverage my account and something I'm not sure of. So I like USD CAD for the buy. And what we're going to do is we're going to keep track of every single one of these trades. So in 2 weeks, when we come back to these, I'm literally taking simplicity trades once to twice a month. Well, more accurately, 2 to 3 times a month, and then manage them accordingly, seeing kind of what results we can get to prove that, hey, even this reversal based system, even averaging a 70 plus ish accuracy ratio, you can still be incredibly profitable. So, USD CAD potential buy is what I'm writing down. And I'll check this again in the morning to see if it's ready. But for now, I'm not going to do anything. For now, I'm going to kind of keep this on my watch list and say, okay, I either need a reason to enter, which means I need my golden strategy to confirm on the 1 hour time frame, or I need simplicity to give me a entry, or I need the break of this fractal before I take this entry. So give or take, 700-ish pips. Well, not 700, sorry. I'm thinking indices right now. So 70-ish pips, I should have said, to the first level of structure. Come back down all the way up to, if we do get kind of the measured breakout. Remember, we have about a 70-ish pip take profit. That's your first. Your second is about 120 away to break this level. So not bad at all. Something to kind of keep your eye out for. I love when you guys are not as talkative as you guys are in the mornings. So let's real quick. That was the only USD trade that I was considering. Now I was also looking at BTC, so Bitcoin. Let me make sure I got the date on this. So that's 5/18/2021. So it's all recorded appropriately. Bitcoin 1 hour time frame. Of course, everybody knows, everyone's been watching this like a hawk. Let's watch how many trillion pips this is coming down. That's an insane level of pips. I don't want to dare try to do the public math to tell you exactly how many. I'm reasonably positive that's 23. Hold on. Let's see. 2, 3, 2.64. 23,000 or 232,000 pips with a single entry in terms of how much this has dropped. We know it's only like technically a 10% retracement, but still, we know bigger time frame, this has kind of pulled down a little bit, but we're sitting at where prices stopped before. So if I go to the line chart and I show you what we're seeing, remember the green line is now officially the candles. So we turn the candles into a green line to see a little clearly. Price is literally only retesting where prices stopped before, which means we have enough room potentially to come down another, give or take, what is that, 20,000-ish pips? Let's see, 20,000-ish pips. I think that's 2,000 and how we count them. But either way, there's some room to come down a little bit more, but we're not looking necessarily for that. We would need confirmation. And by the time we got the confirmation with the breaks, it's going to be too far. So let's go back to the 1 hour. Let's go back to candles and let's take a look at what we're seeing. So candle formations, 1 hour. I'm going to come all the way over and I'm going to zoom it in, make it kind of more clear to read. Notice we're kind of rejecting off of this point quite a bit. So we've got 1, 2, 3, 4, 5, 6, 6, 7-ish, candles worth of rejection. We've got days and days worth of rejection off of this point. So I don't time bottoms. I don't trade that way. I never do. I feel like it's a failed approach. I know more people who lose that way than win, but we still want to kind of take credit for, not take credit, but pay attention to what's happening here. So potential double bottom forming, right? We don't want to necessarily wait for the break of this. We want a kind of an earlier entry if possible. And the blessing about simplicity is we've got what? We've got kind of this little support and resistance portion that's built into it. So you can also say, hey, on the 1 hour time frame, BTC USD, if we break this structure or this fractal level, I'm going to take an entry on the buy. If we break this fractal level, again, I'm going to take an entry on that buy. How many pips is it worth? Again, broker to broker is a little different, particularly on cryptos, but it's worth an awful lot. So minimum of what is that, 2,000-ish, 20,000 actual, all the way up to 5,000, 50,000-ish actual pips. So not a bad potential trade. And notice that even coming all the way to here doesn't change this downward momentum. that's still trading kind of the reversal in the trend. So until we kind of break this zone and retest it, we're still going to kind of be considering potentially more potential on the downside than the upside. So as we said, we have enough potential to go down and enough potential to go up, depending on the time frame we're looking at. But short term, 1 hour time frame, probably below, we're looking for this potential entry for the buy. So if I come down here, let's see, this was buy at fractal, same thing with that. So what I'm doing is I'm keeping kind of track of these fractal, I can't talk, fractal buy potential in the 1 hour time frame. We've got a 30-minute signal. We've got kind of this double bottom forming and again forming. We're not yet breaking above the 50 on the 30-minute time frame, but we've got a lot of potential here. So we broke above the 30-minute fractal and we definitely have the room. So short-term scalp potential, even from where price is currently at, that's a really safe 600, 6,000 pips, right? 600 or 6,000, depending on, how your broker is calculating it, because every broker is different to begin with, but it's extra different on crypto. So a really good potential trade. And if you want the safer entry, wait till we break this level, this structure, and then consider taking this trade. Of course, with your own confirmations. You don't want to take it just because I said so or the guy next door. Anything short of a burning bush is not enough of a reason to take a trade. You need to have your own confirmations and your own set of rules that say, hey, I like what I'm seeing. This matches, what I think I have set up for my rules. This gives me confluence with all the little check marks on my list. I know my risk and my reward potential, and I know what I'm doing. So please don't just take it blindly because somebody says so, including myself. So that's trade number 2. Anybody got any questions, comments, any of those things as I go through to the next pair? CAD. I'll come down here, scroll to the left. Okay, CAD, not the 30-minute time frame. Let's go to 1 hour. 1 hour time frame, we're kind of doing this kind of almost wedge formation, this potential kind of ABC corrective pattern, if you will. If I pop up another time frame to get a slightly different view, let's see. Again, nice, beautiful double bottom formation. No confirmations on the 4 hour time frame, but we definitely have it on the 1 hour. So what if trading was as easy as taking something like this, a reversal system, having a reasonably sized account, having reasonably sized leverage and reasonably sized risk? This is not go for the gold, grow it or blow it. This is not, 20%, 30%, 13% even per trade. This is meant to be, 2 on the safe side, 3, 4, 5, max. I mean, I guess I'd say 5, but some of y'all are going to do 7. So max 7% risk or reward, depending on how you're calculating your trades on a system like this, because overall your wins and losses are going to pay out exponentially because your take profit should be double, if not more, than your stop loss if you're trading on these higher time frames particularly. So CAD 1 hour time frame, we got our simplicity signal here. We came back and retested and failed to make a lower low. We literally just retested where price broke out. And we'll also notice this super interesting area right here where we get this big wick of rejection, right? Beautiful trend line kind of bouncing off of that. For those of y'all who have eyes to see, then you see it. But we don't want to skip out the fact that we have this huge kind of engulfing candle. We have this momentum push to the downside. This counts too. This has to be considered or factored into our analysis when we're saying, hey, what are the current candles doing? What are the current candles telling us? What's the story behind it all? So please keep that in mind a little bit as you're taking or considering take this trade. We could come all the way back down to the 50 and then come up. So overall though, stress-free trading, if I were to take an entry right now where price is currently at the gray line, right? The gray line draws on MT4 for most brokers. My risk is anywhere from 60 pips to even 40. You can even have it tighter, but I probably wouldn't have it any tighter than 40, 50 pips. So 50 pips with the potential of, there's your 1-to-1. Come on, mouse, don't be silly, Apple computer. Apple computer. Let's see. 50 pips, 100 pips, all the way up to kind of this next zone, right where price started to break out. So that's still a 2-to-1 risk to reward ratio. Now, will we get that high? Maybe, maybe not. My target's probably closer to 80 pips than 100, but you're still greater than a 1 to almost 2-to-1, not quite. I'm not going to do that math in public, but not quite. I'll be looking at kind of right here where price stops. makes this nice impulse drop right below this level of structure, because that's where we get the momentum push down. And we definitely have the oomph to do so. So on CAD for the potential buy, ta-da. MT4 time is 8:17. That's Eastern Standard Time. But that's the next one. And let's see, odd NZD. Let's see, that's not gonna work. Odd NZD. Comparable kind of thing. The biggest thing to notice on this one is notice we have a gap. So you can't see it that well on the 1 hour time frame because, well, this looks like it's a bold candle. But if we keep going lower, you're gonna see a beautiful gap. Huge gap. I mean, that's huge in perspective to like this pair, how much this pair trades. That's, 25, 20, give or take 25% of the daily move. So this gapped pretty heavily down for the pair that this is. Of course, that gap has already been filled, but now we're seeing kind of wick rejection off of the 50. So now I'm going to zoom back in, come back to the 1 hour time frame, keep it as simple as possible. I'm going to make the candles a little more ugly, come back up and kind of see this formation that's forming. It's ugly, it's messy, especially with the fractals and all the colorful stuff on here, but it's reasonably easy to kind of see this rejection, to see once, twice, 3 times we've bounced off of this area. We have potential head and shoulders and crowns, depending on how you guys label your own structures. Everyone tries to be a guru and come up with names for things like this. Some people call this a crown, which is not a valid harmonic or numerical pattern, but people do count it. So take that with a grain of salt. Either way, we've got this nice kind of potential breaking out. And again, you have a pretty tight potential stop loss. So your stop loss could be as small as, 20, well, we'll say 25, 30-ish pips, and as large as, come on, silly head. Say 45 pips, because remember, we want it a little bit lower down than what it's actually at. So kind of scrolling out, if it will let me. Let's see. Okay. Gotcha. Hold on a second. There we go. Sorry, they're handling some administrative stuff for a second. So odd NZD potential buy setup. I'm looking for an entry right around in here. We've already kind of bounced off, came back, gapped down, filled the gap. Could this show us that we have downward momentum? Absolutely. Could that gap have been trying to wick out all the buyers? Absolutely. So even here, taking super stress-free trading, super no nonsense, no super overthinking it. You don't have to be an expert to use a system like this. Anywhere from 45 pip stop loss. Your first take profit's probably going to be anywhere around, going into structure, 50 to 60 pips. Your second take profit, I'm not coming all the way back up to this zone, but again, as to right around where price broke out, 115-ish pips. Not bad. Just looking at structure, looking at kind of places where price has stopped. Anyways, so not a bad setup at all. Odd NZD for the potential buy. And this is all I did. When I used the triple arrow system, that's all I did. Now, mind you, I can't be in all of the CAD pairs, and a lot of these pairs that I'm getting ready to call out, they're all CAD based because CAD has the most potential right now, and our show is showing the biggest signs of potential reversals, whereas like USD has made some huge moves, but isn't showing the signs of potential reversals coming, at least not today. It could on Thursday or on Friday, but just not today. So for now, we have quite a few CAD pairs on this list, and we can't take them all. So I go through something like this. I make up my decision in terms of which pairs I want to take. I take my 4 to 5 entries in a week or two, and that's it. Let them play out accordingly. Sometimes they close in a day or two. Sometimes they consolidate and just, mess with your head for a good week before they decide to take off. We can't control the market, but a system like this means you don't have to. That's the whole kind of concept. So I don't think I did CAD JPY. CAD JPY I started because it's one of my favorite ones for the setups that I saw. Anybody who's been watching this, man, people have been waiting for this sell-off forever. So I'm going to come up a time frame just for demonstration purposes only. This has just been pushing up like crazy. And we can talk about the reasons why in terms of the Canadian dollar and the oil. We can talk about the Japanese yen and all the political stuff there. But needless to say, this has been pushing up nonstop, just relentlessly. You'll notice we've made higher highs time and time again. So where price is currently at, our next level of structure, or area of interest, I don't want to call it structure per se, but it's 150 pips still to the top side. Can we get that far? Technically, yeah, technically we can continue to push up. Huge full body candles. If I kind of zoom in, you guys can see that a little more clearly. Huge full body candles on the weekly time frame. This thing has some steam. However, we have enough reason on the smaller time frames to say, okay, let's start looking for a potential pullback. We're not saying that on the weekly time frame this is going to reverse down for the next 3 months. We're saying on a reversal system, we believe we have enough hours worth of a reversal and pips potentially out of this reversal as a reason to buy it. So target that I want to show you on the weekly time frame before we go back down from where price is currently at from the gray line to the last level of which it stopped is approximately 170 pips. Now let's go look for an entry. And you don't have to use a time frame like this to find your entry. You can use a smaller time frame if you want the tighter ones with the tighter stops. That's totally fine too. So here's our 1 hour time frame, CAD JPY. We have a brand new kind of fresh simplicity signal, and you'll notice the next few candles are giving you confluence. They are. Yeah, I gotcha. I got your message. Anyways, so we know that that's what's happening. So what if we can take a handful of trades? Again, the concept being stress free. We're not going to over fret. We're not going to over leverage, and we're not looking to make $100,000. We're looking at this like a savings account, or you've cultivated or grown your account maybe 500, not 500. Sorry, so many numbers in my head. $50,000 this year instead of going for six figures multiple times over and over. Your target for the whole year on a strategy like this, if you're doing the slower, safer scaling, would be much, much smaller. It might be a few thousand, it might be 10,000, depending on your starting balance. It might only be 50,000 for the entire year. But as you can see, it's a different formula in trading. It's just meant to be simple. It's meant to be anybody can follow this system, follow a couple of rules, manage it accordingly, trade a handful of times in a month, and have some potential to withdraw. Withdraw 30% of your profits and go on with your day kind of set up here. So, but back to CAD and JPY, we've got a fresh signal. Currently, price is pushing up. You'd have to go to a smaller time frame to notice that this one gapped too, which is a reasonable gap from where price closed here to where price opened. That's approximately 11 pips or so. So that's again 20%, well, not quite 20%, 15, 18-ish percent of the average daily range. That's not a nothing move. It's nothing to us who trade bigger things and they trade faster things, but that's measurable. This was enough to kind of knock out people. We've already kind of closed it. This is showing us the market may want to continue to the downside. So this engulfing candle, not my concern. What I would be doing at something like this is waiting for it to come kiss the 50, to kiss the 50 EMA. I'd be waiting on a smaller time frame for a perfect entry, or I would take it upon the break. So I'd be taking it when it broke out of this zone. And again, we already discussed on the bigger time frame, our target's approximately 170-ish pips. So let's make it ugly and show you what that looks like. Stop loss currently, we'll say 55 pips, because remember, you want it bigger, right? Anyhow, so you want it bigger, 55 pips all the way down to 50 is here. That's a 1-to-1. Here, that's almost 2-to-1. Not quite 3 till you get here. Well, actually be bigger than that, but around here. Remember, we said our target was anywhere in and around here. Our target.
Hey, Jenny,
Yes, ma'am.
um, could you explain those fractals? Is there particular numbers that you put, or how does the actual fractals work, if you don't mind?
No, not at all. So there's a
This is
beautiful.
Michelle.
This is who?
Michelle,
Okay.
I'm in
Well,
the morning class. I'm in the morning. I was in the morning class today.
yeah, I saw your name in there. Thank you so much for first off being here. So fractals, there's a really awesome video. I haven't seen it in a while, but it's floating around. It's like literally 4 or 5 minutes long. It's free. It's on YouTube. It explains it better than me, but you're gonna get Jenny speak for a minute. So basically, the fractal forms when two candles below and two candles after fail to make a higher high. So this is gonna form right here, right? A downward fractal forms when two candles to the left and two candles to the right fail to make a lower low. So It's a 5 candle series. Now there are some that are coded differently. We have to, insert here for all the very politically correct people. But in general, Bill Williams fractal is part of Bill Williams set. You'll see it here, right? Anything about Bill Williams, you can Google, you can YouTube. It's all free information. And as you can see, it's made it onto MT4. So it's notable information. But that's how it's calculated. The calculation specifically is 2 candles before this third candle, you're going to get the fractal. It's going to appear on the fourth candle, but it can repaint, meaning it can disappear. You no longer see it. By the close of the fifth candle, it is solid. So as long as this fifth candle fails to make a higher high, this will never disappear. So you have to know that kind of piece of information, because if you're trading with them the way some of us do, it is not stable until you get 2 closed candles afterwards. This can repaint and it can disappear because, well, this can push up and make a higher high. So therefore the equation is no longer valid. Does that
No.
make sense?
Yeah. Okay. Okay. I
Trading
got
strategy wise, like there's a ton of strategies, and like a lot of things, most of them are literally the exact opposite of how I trade. So most of the way it was written was to trade the if price is trending up and you get a down fractal, you're waiting for confirmation and you're taking that trade, right? That's a very simplistic way to explain one of the ways it was created to be used. I use it the exact opposite. If price is trending up and I get an upward fractal, I break that zone, I'm taking an entry. The reason I do it backward literally is because I understand the logic by the people who are taking these trades. It makes sense, I get it. But I try not to be buying when the market's selling. And when the fractals are forming down here, the market is selling. I try to be buying when the market is buying. So if we break a fractal level, that's confirmation the market is moving in the direction I want it to go. That's all I'm saying. So when we break a fractal, we have the potential because the market is moving in the direction I'm saying it's going. That's kind of how I look at them personally. That's how I use them. I have complete strategies built off of literally that principle with a handful of oscillators. That's it.
okay.
So
All right. Thank you.
you're
So
welcome.
you don't have to put when you put them um on your system, is do you have to plug in certain amount of numbers, or it automatically is formulated once you put it on the screen?
This is all automatic. So if I come here, you can see fractals is here. If I go to edit, there's literally no customizable setting on this one. This is standard.
Okay. Okay. Cool.
So now they're fancy people make fancy stuff, but that's the basal kind of explanation. And they help you. If nothing else, they help you see structure. They help you see, the highest high. They help you see where prices stopped and sold before.
Okay. And that's usually how you determine what was the highest high and what is the lowest that you can do your stop loss. It helps you with your stop loss and your take profits.
Yes, for sure. So I look at the fractals for entries first and foremost. I look at the fractals for potential take profits, secondly, and then I look beyond the fractal for stop losses. So remember the ATM has a feature in here that allows you to kind of use a structure based, i.e., fractal stop loss, and that is literally what I use on almost every single strategy is a fractal based stop loss. Now, mind you, it's expanded a little bit with the spread, it's expanded a little bit with the multiplier, but so think, the last 3 fractals plus some. It keeps me always in line with structure. So this kind of stuff doesn't chop me up as much, provided I don't make a higher high. My trade is safe. If I make a higher high, I'm out. That's part of the trading world, but that's how I use them. Yeah.
Okay. All right. Thank you.
I'm welcome. Okay, so CAD JPY, guys, was the other buy, not buy. Wow, I'm gonna get tripped up. Sell that we're looking at. Again, I have a star next to this one. It's one of my favorite ones. It's one that I'm reasonably sure I will take. And the reason I'll take it again, we gapped down. We've got a new signal. I'm not dare saying this is going to go against the long-term trend because the trend is what it is. The trend is your friend. But remember, this is a reversal-based system. So potential, give or take 170 pips to previous structure, right, where prices stopped before, with the potential 55 pip stop loss, that's greater than a 3-to-1 risk to reward ratio. That's a trade that's worth investing in, right? We don't have to be perfect. We don't have to be the smartest or to know it all to have some success in this industry. And if more people could get that, I think they would get much farther. So that's one of my favorites for sure. And then Euro CAD, let's take a look. EuroCAD, same kind of thing. I'll go to the big time frames just to show you. Well, that's not going to be a super beautiful picture, although this beautiful trend line is. Go figure. Let's see. Daily time frame, we're looking for a reprieve. This is a reversal based system. So we kind of get this slanted formation. We do have some divergence on other systems. Coming down to the 4-hour time frame, we have a brand new simplicity signal, right? Ta-da. If I use my crosshairs from where this signal is coming up, that's an open candle, right? So we get that. But this also is breaking out of a 4-hour fractal level. So 4-hour fractal level, my stop loss is a little bigger on this one. This is a faster mover. 100 pips, give or take, to 170 pips. My first potential is 125. That's my bare minimum. My actual potential is somewhere in and around that 270 pip range. That again is greater than a 1-to-1, a 1 to 2 to 1 risk to reward ratio. Not a bad, setup. So it's not a bad idea to say, okay, I'm going to take the most high likelihood of these trades. Remember, you can't over leverage per currency either. So just because the best two setups happen to be CAD, we can't take 5 CAD trades today. Like you can't, if you, for example, we have 1, 2, 3, 4, 5, 6, 7, 8, 9. Did I count that right? Yeah, 9-ish trades to go over. If 4 of them are CAD, you can't pick all 4 CAD. You have to decide some of the things to diversify your account, because if anything does happen with CAD, even safer trading, could blow your account if you lose too many of the same currency. We call that being over leveraged in a single currency. So, but I love this one again, 1-hour time frame coming over. I'm going to minimize it, make the candles look a little ugly. What do we see here? Head and shoulders. We're kind of breaking out of this really deformed neckline. But again, we broke out of a 1-hour fractal. We're closing above the 250. We're continuously making higher highs, and we have some room to go. So 1-hour time frame analysis, where price is currently at, maybe even a 33 pips, which I'm, going much beyond that. Your smallest stop loss, like we already said, is approximately 111 pips. That's big for a Forex player. Not everyone is on board with that, and that's okay. But you have to decide your trading style. You could also say down here that's 70-ish pips, a little bit better of a stop loss, although you need to give this thing room to move. So worst case scenario, you can say if it breaks this level, you're going to get out, tight stop loss. Although remember, having a tighter stop loss isn't always the best idea, particularly on these swing trading strategies, because you need to give it room for the market to, be in a mood, right? Like that song, Why You Always in a Mood? That this is it. So we have to give the market room to be in a mood. It's been in a mood for the past, what is this? How many weeks? Hot minute. Let's find out. Consulting mostly since April 30th, but we could even say for sure for the last 10 days. Not bad. Like it's just been playing around. It hasn't went anywhere yet. So that's my next trade is my EuroCAD. Let's see for the buy. So again, we've got 1, 2, 3, 4, 5, 6 trades we've went over so far. You can't take them all, but if we decided to say, hey, we're going to take 4 or 5 of these, we're going to see how this plays out in the next 5, 10 days, because some of them are going to, mess around. Some of them are going to do nothing for a minute. That's just part of trading. And to see what these result in the next handful of weeks. So Euro Chef is on my list, not starred on the other hand, not beautiful, not perfect, but still got some potential. Really wide double bottom formation, really, really wide. We're currently pushing up. We kind of get the first buy signal. Well, of course, Simplicity gave us another sell. No current buy signal on Simplicity, although we're above the 50. We've came back, retested it. We fooled around with all the wicks, and now we're still pushing up. So if you want the safer entry on this and you don't want to fool around, you can say, okay, we got a wick forming. I don't want to take it until this fractal breaks. That's fine. It's totally fine. You don't have to take it until that fractal breaks. The fractal is on this candle. Let's find out exactly. 2200. We're kind of still sitting in this area. So waiting until we get that break above that, again, take that trade. Your potential targets on this, you're looking for a measured move. So before you look left, you're looking down. So before I look left, I'm going to look down. I'm going to take one of the lower peaks and the smaller side of this W. That's 50 pips. Okay. Not a fast mover, but your first take profit is going to be anywhere around here, which is 1.1035. Not a bad take profit. That's 1 to 1. Now let's zoom out and see how much more we can get out of that. Kind of ugly. I see it too, guys. Again, kind of coming from the middle. Your first take profit being 50-ish pips, 1.1 we said. Not a lot. Are we going to come all the way back up to here? Possible, but not without some massive foolery. So the best we're going to get on this is probably like a 1.5 to 1, 1 to 1 ratio, which makes this maybe not the best trade to put in your arsenal. The reason you would consider taking this as you take it as your diversified kind of trade, as your, hey, I don't want to only be in the CAD pairs. I want a chef as well. So this is the one I'm going to choose. So not horrible, not my favorite. Odds are I won't be entering that one. Well, hold on. Let me be more fair. 4 hour time frame shows a little bit more room, but still, that's a lot to ask this pair to come all the way back up to here. And that's not a lot of pips to get out of that big move. So keep that in mind as you're trading this a little bit. There's not, because to stay with the trend, if we were to draw a trend line based off of where prices stopped before, kind of ugly, not perfect. I'm willing to bet if I change my line chart, that's a little bit too far off. So I'm going to come a little bit closer, closer. Expand this out a little bit to touch more of the peaks of that. Peak. Coming down a little bit. So even to come up to here, not an optimal trade because you're barely looking at a 1-to-1. 1-to-1 risk to reward ratio is what you're looking at. 50 pips, 50 pips. Odds are you'll get closer to 40. That's what we're seeing. Unless, of course, we break out of this, retest, and then continue. If we break out of that, then, of course, you've got a more valid continuation. But until then, not so much. We would need the breakout. So there's your risk to reward on that. Not perfect, but there you go. GPB AUD is my next one, if I can find it. I didn't love most of the, we'll go back to candles. GBP AUD. So again, kind of remember, I don't trade reversals. Oh, not reversals, but I don't time tops. I don't do the whole prices at this zone. So I'm going to buy here or sell here because it's at some certain area of interest. Because again, I have yet to meet a lot of super successful traders who do stuff like that. So instead, I will acknowledge that this is kind of in an area. So we've rejected off of this area a handful of times. We have to acknowledge that fair and square. Bigger time frames show this has the potential to continue beyond those areas. Currently, we're not. So as of right now, we have kind of failed to break above this area for the past 11. What is that, 5-6 months, give or take? We failed to kind of break this zone. So can this be the portion where we break out? Absolutely. But before we do, can of course they appease all those people who are trying to sell this? Absolutely. So we want to treat this with a grain of salt. We know that this has the longer term potential to kind of go up. It is consolidating on the big time frames, which means it's doing nothing, and trade that accordingly. But now we'll go to the day chart, or the hour chart, sorry. Hour chart, double top formation, rejection. We kind of get this nice wick spring formation. We don't yet have an entry, not on the golden strategy, not on simplicity, not on either at this point. So I'm just saying I'm looking for this area. I'm not going to take one at the break of this first fractal because structure is too close. I don't like taking trades into a zone like that. I will, however, say if we break this level, so look at the super easy kind of simplicity structured dots, right? Or what super easy dots. I forget what they're called now. Anybody else know what those are called? That's quite a bit of pips away, but still, I would much rather be on the safe side of accurate than on the wrong side of the really risky side of wrong. That's what I wanted to say. The safe side of accurate than the risky side of wrong. So just treat that with a grain of salt. Right now, we have no entry, but it is one that's on my watch list. So if I go to the 30-minute time frame, odds are in favor as soon as my MT4 catches up. Ta-da, we get a little entry. We've already pulling back. Until I get another break of this 50, I'm definitely not taking it. So I'm either waiting for a re-break of all the way down here or a break of at least this 50. I need something to tell me, even on the smaller time frames, I'm ready to take this trade. As of right now, it's just on my watch list. It's not something I'm willing to enter until I get the confirmations. So there's that. That's a maybe baby situation. Maybe so. Gotcha. And then, of course, last but not least is NZD CAD. So NZD CAD, there we go. Ta-da. 1 hour time frame, super buy. Again, because of these stinking CAD pairs, I have to go to this really big time frame to show you how much oomph this had to sell. We came back up, retested 50% of it, and again came back down, made a spring. We're failing to make lower lows. Huge, huge wicks to the downside. So we know there's a lot going on with the Canadian dollar. We know that oil stuff is all happening around the globe. We know that's all relevant. But remember, we're technical analysis traders. So 4 hour time frame, you have this beautiful formation forming, but no confirmations yet on the 4 hour. But we are going to consider that when we come look at the 1 hour. So 1 hour, double bottom, of course, that's already played out. So this is no longer valid. But then we get this over here. And this has an active divergence on the really big time frames. And divergence on the big time frames is a lot more confluence and more of a confident kind of, it's more of an assured signal. So no guarantees. We can't dare say that. You lose some, you win some. But we can say potential buy setup, even short term, it's a really good risk to reward ratio. So from where price is currently at, the gray line, up even into here, 50 pips to where price has stopped before. So look to the left, price has stopped here before. We've already retested that. And that wasn't enough to break a lower low. So the odds are very highly in favor of us breaking above and beyond that before the market decides to go lower or higher. We need to break out of this high. Because remember, we came up, we retested the previous low. The next push was not strong enough to break below here. That's indicating the buyers have more control over this market than the sellers. The sellers did not have enough to get below. So we're looking to kind of go on the right side with the buyers. We've got the confirmations. Not a fresh simplicity signal, but definitely in line with where we would have gotten the signal, right? Price is at the same spot. So you're not missing out or losing out or gaining anything by being here right now and saying, okay, what would my risk to reward be on this trade? Anywhere up to here, that's 47, we'll say 40-ish pips. We want to undervalue versus over. And my target's going to be closer to 78, 80, anywhere in and around this zone. Maximum stop loss is around 60. Your stop loss could be as small as 30, and even as small as, well, I'm going to round that to 20 because I don't do 15 pip stop losses. So 20, 25 pip stop loss for potential 80 pip gain. That's 4-to-1 risk reward ratio. That's not a bad trade whatsoever. So those are the trades that I wanted to look at and possibly go over. Now, what I'm hoping to do is in 2 weeks, or when next time I come on for simplicity, is come back on, take a look at these. We'll write down the exact time. So we know MetaTrader 4, their time zone is a little different. But we know that we looked at these trades on the 1 hour time frame is where we were finding our analysis for the most part. And we know we looked at them on May 19th. Holy cow, I thought it was the 18th. I'm really smart, guys. Oh, it is the 18th in America. Sorry. So May 18th, I know what I'm doing, but May 19th on server time, and that's at 3 o'clock. So that's at 300. So 300 UTC server time. The idea is a lot of you guys, when you're taking trades in real time, you're getting tripped up by everything that's happening. You have all kinds of whims and losses and happy moments and sad moments and fussing with your munchkin or burning your mouth on a hot dog and everything else that kind of came in between in real life when this stuff happens. So when you look at your results in the last 2 weeks, you're thinking, holy cow, I'll never be a trader, or this is too complicated, or nothing ever works. But the reality is, and I think I've become the voice of that in multiple companies right now, if I am not the shining example that almost everything works with the right rules, then I don't know what is. I truly believe that almost any system can potentially be profitable with the right rules in place. Just like any relationship can be potentially amazing with the right, agreements and structures, the way you guys treat each other, right? It's almost anything is possible, managed correctly. That's the whole kind of thought process theory that goes with it. So, but those were the trades I wanted to go over for tonight. So if you guys have questions, comments on management, I know there was a lot of comments this morning on management. If you have comments on pairs you want to go over, now would be the time. I am going to look at YouTube really quickly because Miss Donna had to go with Kaden real quick. So she is not on looking at that. So let me look at that while you guys come up. Put any questions in the chat. You don't have to raise your hands. I'm not all that formal. Come out and talk because I don't talk to myself, at least not publicly too often. So, at least not publicly, I should say. Looking for Safari.
Hey Jenny, this is Melanie.
Hi, Melanie. How are you?
Hey, good and you?
I'm good. I'm really good. I'm blessed.
Okay. So my question for you is I work of course I'm in the Eastern Standard Time Zone, but my hours of working would conflict with I don't want to say conflict, but the time that you have your scalping classes, I'll be at work. So if I wanted to know, like, could I still maybe like hop on a Zoom call and take trades while I'm working, or I'm like, is it doable? Like my job, I'm pretty much just sitting at a desk. Like right now, I'm in the super. I do Uncle P classes Tuesday and Wednesdays, and I, have my earbuds in and I'm just listening. I'm taking notes. So like, I'll pretty much be doing the same thing for your class while I'm working. So I wanted to know, is it possible to be able to like enter trades, during that time? That sounds crazy.
You'd be surprised how many people are already doing that. They're totally like they've got their day jobs that they're in and out of work sites. They're in and out of taking the trash out. It's real life, right? You'll hear my munchkin every now and then if they're home. So as long as your job is not gonna you're not gonna lose a job over it, right? You can totally zoom in. I can actually ask Miss Donna to maybe when I call a trade to post it in the chat. That might be helpful. But in general, as you can hear, I talk fast. And the stuff we go over, they're fast paced stuff, guys. So I think you'll learn a lot just by coming and hanging out. Not only do we take live trades, but I'm going to try my best to incorporate lessons in between the live chains trades and the hangouts in between, because we cover a lot of in-depth stuff that you don't hear on a lot of other calls. We discuss in a more open format. Like it's nothing the empty airwaves, but it's there's a collective amount of people who weigh in, who have perspectives, and we discussed difficult and conflicting theories and thought processes, managements and strategies, and in that there's much to gain from that experience alone. So I definitely think it might be a good idea. And if it's not for you, it's not for you. If you're like, hey, all those people, then no problem. It's not for everybody. So it's that open environment, if you will. And I definitely think you can catch some pips, but you got to be good at management. You got to be good at uh, so let's pull up German 30.
Okay.
I was looking for this that's a big time frame. We're not looking at this on that time frame. No, no, ma'am. But I was looking for this to sell all last week. It wasn't ready. I was waiting for a break here. We just kept not getting one. Of course, we sprung up to make a higher high, and now we got this sell. So to give you an idea on this pair, which is worth more than $10 a pip, that's almost 2,000 pips that happened today. So previous.
Wow. Yeah, that's a lot.
That's one trade one time. So and remember, this is actually valued higher than like US 30, which is $10 per standard, which per pip, depending on your broker. As a disclaimer, this is like 13 or it's more. Don't quote me on what more because every one's a little different, but it's even more expensive. So as long as most of the trades I've been calling, because there are so many new people, haven't been on the 1 minute and the 5 minute so much lately, they've been more tailored to the 15 minute, which might mean a pullback. It might mean some drawdown that is emotionally difficult to process, but it also means you can catch this and you have the time to do so. So give it a try. If it's not for you, it's not, but I think you might I'm all about finding the girl power and having as many ladies and building up female entrepreneurs. So definitely come on
Okay.
in. Like,
Okay. All right. Thank you. And I have one last question. So if I'm getting in the trades in the class, how long are your classes? Will I be pulling out? Like, should I close? Are we closing out? Because I know we're scalping. So pretty much we'll be closing out while we're in the class, right?
well, in theory, so if you're doing like my compounding sheets, yes, you can get your 10, 20, 200, 300-ish pips on an index, in and out, you're done. But also I'm giving the opportunity to catch longer portions of these trades. So we use a trade manager. So for example, I'm going to pull this up, not to, this is about to complicate you, but so it's something like this. This is a version, a setting, not the exact setting, but it's a tool that helps you not only manage your trade, but for example, if you took this trade, okay, I'm going to hit escape. So it locks that into place, right? That's saying I would have got 900 point pips profit so far, and then it would have closed me out. that's saying, hey, if I entered somewhere around here, my manager would, protect me with my stop loss. It would trail me. It would scalp me in and out, or scale me out of the trade, not into the trade. And it will help me manage the trade, even if I was working or if I was driving, or if my youngest son called, Mom, I fell out of a tree. Like, I know what's happening on my chart. So we really advocate trade managers of all kinds. This is the one that Scott happened to build. There are other ones. There are a couple of free ones. There are other paid for ones. This is just the one that I recommend. So, but trade management would be key if you want to make sure your trade is managed, just in case you took a blink, because a blink on some of these indices is 2,000 pips. A blink on US 30 at opening bell is potentially, 2,000 pips, literally in 60 seconds. Not all the time, but enough of the time to be mindful of it.
Yeah. Okay. All right. Well, thank you so much for the information. I look forward to joining your class, hopefully within the next 2 weeks or so.
Yes, ma'am. That'll work. Thank you so much. I super appreciate you. I look forward to you being there. So,
Absolutely. You're welcome.
okay. So let's see. I'm looking in the chat. Keith, I'm working on it. I do have a PAM account that is working with LQDFX. If you don't have that broker using my links, please make sure you do. Um, Here, I'll grab them again. I'm actually getting good at this organization thing a little bit, guys. I'm proud of me. So I'll drop
Gary,
them.
can I make a statement?
Yes, sir.
Uh, I'm not, is that me or you?
That's you, Derek.
That's somebody calling me from overseas. Oh, man.
Go ahead and take it. It's okay. We'll be here.
No, it's just a quick statement. I'll text them there.
Okay.
Afghanistan, I'm sorry. Having Donna pulse scalps can be dangerous because, the timing could be off.
Yes,
That's my only concern about that.
I agree. Like Derek.
Okay.
So I see.
Yes.
I
That's
see. Okay.
okay. Now I got to log off. I got to call someone.
All right. No, have fun. I'll talk to you soon. Thanks.
All right. Bye-bye. Mhm.
Okay, so for the guy who said, can't you just trade for me? Honestly, Keith, I would love to see you do this. I would love to be the person that helped you do this. And when I do, I get a Starbucks gift card or like a trip to Bora Bora. I'll take either. Costa Rica is good too. But anyways, jokes aside, you can do this. If you stay the course and are willing to stay with a single strategy long enough and continuously tweak it and adjust, right? Most people, they start new things and they quit because they're stressed or because there's emotions or because life happens, rather than looking at negative or difficult situations and saying, okay, how do I adjust this for the better? How do I adjust this for the positive? You can do the same thing in trading and investing and in a multitude of other businesses and business models as well. But it's a you factor that you have to build in yourself. But as for the other side of things, I am working on a copier service. I will only do it if it's broker based. I do not want an EA version of it because I feel like they're dangerous and they don't work effectively. For now, I'm gearing more toward a PAM. It will be public eventually. They don't allow PAM accounts without fee, so we'll do the smallest fee that broker offers, which is 5%. And not a bad setup, especially not with the track record like mine. So you'll have access to that eventually. But please do go sign up with the brokers that I put in the chat. It would be a good place to start. The yellow line, Paul, is a 250 EMA actually. So that's a 250 EMA on whatever time frame. That's what that is. So, Thomas, Guy, can you unmute yourself? Because you were the guy I was looking out for. Yes, this is recorded, and well, in theory, it should be. Yeah, it's recording, and it will be available. So, but you were asking about the management, right?
No, yeah, I was asking about going through the uh, process of using simplicity to actually, manage and take trades and things of that nature. So I know that you've been really engaging, and I'm deeply appreciative or whatnot. I just wanted to know that the recording would be available so that I can kind of go through with a fine-tooth comb and be more observant through the process.
Oh yeah, no, but let's talk about your question from this morning. So yes, the recording will be available. Your question this morning was, okay, so how do you use simplicity to compound like we were discussing in this morning's class, right?
Right.
So I mentioned there would be a handful of things different. So I will pull up the spreadsheet if you'd like here in a second, but let's look at the chart. You
Mhm.
mentioned a flat stop loss and a flat take profit. So
Right.
first off, let's talk about why that's a bad idea. Okay. You'll
Hmm.
notice that the ADR on this pair is, 2,800, pip points in a day. Okay. On
Hmm.
this pair, watch this. The ADR, which means how much this pair moves in a day, is 79 pips in a day. Okay. Let's go to GN. Look how much these numbers vary. So people who are like, oh, I only want this X amount of pips, which includes myself, right? I've been that person too for a decent portion of my trading journey. This one is currently moving 156 pips per day. So having a 30 pip stop loss on a pair like this versus like UCAD,
Hmm.
that's going to get hit a whole bunch. Not only is your stop loss going to get hit a whole bunch, but your take profit, you're going to be crying because you're like, oh my gosh, well, let's measure this. You'll be like, hey, I got my 30 pips out of it, but I really should have got all 100 and I got 1/3 of what I should have got.
Right.
So management should be either structure based, risk to reward based, and I hope you're writing this stuff down because I promised I would give it to you. So structure based, risk to reward based, or ATR based. I think if you want to find the most duplicatable thing you can consistently do across stocks, across cryptos, across indices, across Forex, even exotics, you can apply this to any of those things and still have success. Whereas that whole 10 pip or 30 pip take profit, 30 pip stop loss is only going to be good for pairs that trade approximately the same number of pips per day and you're trading on the same time frame. So please consider using structure, ATR, and what did I say? Structure, ATR. I know what I said. Now I can't remember. Don't remember. So I hope you wrote it down. Anyways, that's going to be for your take profit. Oh, risk to reward. So that brings me to the risk to reward. So if you want to be able to take a reversal system like this, which again, no system is perfect, but everyone wants to come in, try to learn a skill set. Somebody sells them a package or an indicator or a tool, and they're thinking, I'm going to become a millionaire. I'm going to, make six figures this month. Has it been done? Yes. Can it be done? Yes. Can you do it? Yes. But there's so much other stuff that goes into it that if you really want to have a high likelihood of doing it, you got to know what you're doing in terms of this basal level information. So how to have success with a system like this is to first off to know the accuracy ratio. And the accuracy ratio is, give or take 70%. Probably max is what you're going to end up seeing if your rules are not great on a system like Simplicity,
Hmm.
as it's a reversal based, counter trend based system, which doesn't mean you can't make money. It just means you need to have good rules in place. So your risk to reward should never really be less than 2 to 1 if you want to have success. That really exponentially increases your favorability. And I'd definitely be looking more for the 3 to 1 risk to reward ratios than the 2 to 1.
Hmm.
Um, what else was I going to say? Okay, so when you take trades, you're never leveraging per currency. So you can't be in all 4 CAD pairs we discussed tonight. What is that? 1, 2, 3, 4. Yeah, 4 pairs. You have to decide which ones. You can be in maybe 2 of the same currency pair, but not 3, 4, 5, 6. That's going to hurt if something happens with that currency and the country decided to have an oil issue. So,
Hmm. Right. Right.
so how to
I've
manage?
kind of been just sticking with like, one pair and then just, tripling up trades, on that one pair. Like if I'm going to do a 0.05, then I'll do, 5.01s and, kind of stack them or whatnot. Now play the first one out to see if it's going my direction and then set buy stops or sell stops for the other 4. So I've
Okay.
been kind of, just trying to cover myself that way.
But this morning when I said that, look, I was able to accomplish what I accomplished in a very stupid way. And Scott came in and kind of had my back a little bit and was like, no, she did it in a manual way.
Hmm.
That's correct. So I did something very comparable when I first started with some Super EZ, and the triple arrow system is what it was called at the time. So I manually, so for example, if I took this trade, this buy right here on my screen, and if I was trading a standard lot, for example, I didn't enter one trade. What I did, and this is actually all written out in the group file, the Super EZ group file, it's under trading rules.
Okay.
What I did was I took 4 entries and I managed them very systematically. I would definitely recommend go get those documents. If you can't find them, I will get them to you, but I know they're there. So please do your due diligence and look first. So
I will.
basically what I did was point. So if I did a standard, my heaviest amount of my profit was scaled out at, 17. What did I have it at? Either 10 pips or 17 pips, something like that. I'd have to go back. It's been a few years, but the majority of the portion of that standard lot would have been scaled out at that first take profit. So I had
Mhm.
my first take profit real small, like 10 pips, very tight trailing stop. My second take profit was slightly bigger. It was like 40 pips because I was taught that that system was based off of a 40 pip system. Don't even ask me where I got it. I soon realized after that was not even true, but I was told it was true. So I followed it like, like the Bible. I just followed directions, like point me in the direction and I go that way. So
Mhm.
my second was, again, the next biggest portion of my trade closed at 40 pips. And on that trade, I had a 17 pip trailing stop. My third trade had like 50, 70. I think I did 77 pips because I like weird numbers and I'm weird like that, with a 33 pip trailing stop. And then my third one had like some huge structure based take profit or no take profit with like a
Mhm.
5 pip trailing stop. All of my stop losses were the exact same. And in my little methodology, how do I say that word? Method,
Methodological. Mhm.
you know what I'm saying. So in my mind, that made sense in terms of how to manage it. Because at that time, I didn't know what, this didn't even exist at that time. So something
Mhm.
that could scale me in. And this does something comparable. So it scales out a portion, it scales out a portion, it scales out a portion, and it protects along the way. This just does it without me having to spend approximately 10 minutes per trade programming in the trailing stop, the take profit, and the stop loss manually for each and every one of those trades. So
Right.
I know you have access to this, so I really implore you learn it while it's available. But that's literally what I did. And I traded. So I looked for trades I marked up on Sunday night. Okay.
Mhm.
I most time didn't enter on Mondays because not a lot of them went my way. Sometimes I did, but I kind of went back and forth on my Monday trades because I didn't love them. But by Monday night, which is, remember, Tuesday Asian time, I was going to take trades Tuesday morning and all the way up through Friday afternoon is where I found the most of them. But I had a whole like systematic level of rules. So I was allowed to be in 4 trades at a time, 5 if they were locked in profit. I was only allowed to be in 2 of the same currency pairs at one time. If a trade closed on Thursday, I was allowed to find another pair. But if I still was actively in 5 trades, I wasn't allowed to take a new entry on Thursday. Like every if then that statement that you can possibly come up with for problems in trading, I literally looked at the problems and created the solution, and then I kept tweaking it. And those are the
Right. Right.
exact rules that I followed. So yeah. But the last thing, I didn't use a compounding sheet that like the ones we talk about this morning. I used more of a weekly compounding sheet because again, at the time, first off, I didn't know better. I didn't know, a half of what I know now, probably
Mhm.
less. So at the time, every pair is worth different amounts. So I don't have the tool on here, but US dollar pairs are worth $10 a pip, right? But CAD JPY might only be worth 676 a pip, a standard lot, right?
Mhm.
Euro GBP is worth like $13 a standard lot, right?
You're right. Right.
We talked about US 30 being worth $10 a standard lot, but it moves obviously fast. German 30 is worth $13 a standard lot. So there's other variables, and that's where that fancy MACD that we use on my strategy comes into play. That will
Mhm.
give you an accurate lot size based off of the actual pair you're trading, based off of the risk. And we can go over that on Thursday morning if you remind me. But
Okay.
based off of the risk and reward you're setting, that can give you the accurate lot size based off of the actual pair that you're trading with. Okay.
Gotcha. Mhm.
Otherwise, I used a weekly compounding strategy that kind of looked more like this week, this was my account balance. I'm going to use, 1.0 or 1.75 based off of this balance for the entire week for every pair. So it was very generic at the time and it was still effective, in theory, back
Mhm.
thinking back, but there was a more effective way to do it than I now know better, obviously. So I used a weekly strategy where every week I just increased my lot size and then I did that lot size all week, no matter what pair. Next week, if I was up or down, I used whatever lot size matched that up. And again, that spreadsheet is also in the group.
Mhm.
If you can't find it, let me know and I'll post them again. That one's called weekly compounding. So
Okay.
Gotcha. But that was the nitty gritty on how we use the simplicity, i.e. triple arrow system to compound. It's a little different. So, but you can use the same safe risk, do something in between, like we talked about, that between safe and high for a system like this, and you'll find a comfortable place.
Gotcha. Okay. So I just need to grind out with it. Well, a lot more because I'm using it, and then I got it kind of everything. So the dashboard has just been wearing me out, and just to the point where I got so many signals coming through, and I went ahead and put it on the 15-minute and then now the 30-minute, just because there would be so many, I would start to ignore the alerts or whatnot. But then I found that you still, it's not a get an alert and just jump in blindly. You've got to do the due diligence or whatnot. You're still looking for price action and things of that nature. So it's just been great to kind of, still hear, how people are, maneuvering through it or whatnot, because Uncle P just makes it look so easy. Too easy, I think.
Right. He's good at that. So I'm more the technical. I'm going to give you all the nitty gritty and none of the easy hype. So I'm sorry.
Yeah.
But let's talk about that real quick. The scanner. I don't know what your schedule looks like, guy. I have no idea. But either pick your, anywhere from 5 to 8 pairs and turn the rest of them off. OFF off.
Yeah. Yeah.
Change it to the hour. Like, and honestly, you don't even need the hour. You can come check your chart 3 times a day, and there's a bajillion hours. So that we get the signal. That's 20 hours later. 28 hours later. I'm sure you checked the chart 57 times in that time frame.
Right.
This one happened. This one's a little bit of a shorty. That stinks, but it's real life. That's 2 hours later, 3, 4, 5, 6. Okay, that's 8 hours later. I'm sure you checked the chart 16 times in that time frame. If you like, if you weren't asleep, I'm willing to bet on it. So it's the same concept. You don't even need or disable them, when you're not trading. So set yourself a schedule and disable the alerts for when you're not planning on being active, because you still need peace.
Right.
Otherwise, it's gonna be like ding dong all day long on your phone, and people are just going to think you're, doing something illegal. Maybe, I don't know. But
Well, I just ended up turning the scanner off, and hate that I bought it or whatnot, because it was just more sane to just keep up, like you said, 6 to 8 pairs. Right now I'm like really kind of rocking with gold and pound dollar, and kind of cutting everything out. And I'm like, if I can't make my weekly goal off of these two or whatnot, then I'm not doing something right, and I just need to keep grinding and studying or whatnot until I get it together.
oh, I like that. Well, keep in mind you picked 2 US dollar based, very heavily US dollar weighted pairs, but honestly, pick a handful. And yes, I get that you spent your money on the scanner, and I understand what that feels like. Then you feel obligated to use it, but you're more obligated to your peace, your profit, your progress, right?
Yes.
Consider it an expense and a learned lesson, just like we sometimes buy books. For a college class, we didn't even end up reading. Like, it's the same concept. It's real life. Try it. Just take this idea, try it for 3 weeks. If you like what you experience and feel and how you trade, then stick with it. If you don't, then go back to turning it back on. But try just 2 or 3 weeks, no alerts. Let's both be honest. You probably checked the chart 56 times while you were awake, if not more. You don't need it. So pick your time frames, pick your 5 or 6 pairs, because you're going to be a better trader when you're emotionally, mentally at peace. You're going to be a better investor when your head isn't clouded with a bajillion missed opportunities and, well, oh man, I got the odd alert and I didn't take that one, but I took the NZD and of course that one lost. And you got all these feelings and things going on that it's no good. So
That's exactly right. Like, I'm stuck with this slow pair today. I'm married to it now, and the one that I skipped on, of course, that shot out and did its thing. So.
what pair are you married to today? Let's take a look real quick, and then we'll bring up the question.
Okay. I have been working on. Well, today I ended up doing. Hold on 1 second. I can tell you.
You know what my church says, Thomas? My church says this saying, it's like, stop dating the church, make a commitment. And then they're talking about like joining their fellowship program. And it's hilarious because in my world, it's like, stop marrying these pairs. Just, this is not that serious, guy. Like, don't marry any one of these pairs. This is just, if it's good for you and it's good for me, this is healthy. If it's not good for you and it's not good for me, it's no longer a healthy relationship. Euro GBP gotta go, because me and him don't get along. This pair, not a good relationship.
Well, I see people, and you look at their trading sheet, and they've got 4 or 5 different pairs that they're trading on at the same time, and I marvel over that. But I guess I'm just trying to figure out, like, are you just not built that way, or because like, okay, so today I spent the majority of the morning, mid morning, and afternoon with the euro dollar. And I went ahead and went through and marked up the 4-hour chart, and then brought up the 15-minute. And then I said, well, let me bring up the 5-minute. And it danced around for the majority of the day or whatnot. And finally, I was in profit a couple of times, but I went to hang out with some friends and everything, trying to kind of back up from the charts. And it dropped down into profit, back up or whatnot. So it ended up going into a range. And so what I realized is that, you just pick the bad time to follow that pair. And I think, like what you said, there are certain times you need to just shut the scanner off, because, and I know in my mind already, like, Bannister, you do not need to trade in the late afternoon. Everybody's taking profits. They're hanging out. The market is going sideways. But when I got that scanner ring or whatnot, I saw that it was overbought. I said, well, let me go ahead and, jump into this one. And it refused to fall. So I just went ahead and, once it went back into profit, I just jumped out. And it's still ranging, as a matter of fact. So
can I tell you a few things, just pretty please? And I really hope you consider them. Number one, if you want to become a good trader, stop looking at everyone else and always look inward. Like, the more you learn about yourself, some people might be good at 5 pairs at a time. Some people, particularly with like the morning scalping stuff, take one trade at a time and get really far. Like, but you have to decide your personality, and you're never going to learn what that is by trying to be everybody else. So, like, realize where you're comfortable and what makes you get the feels. And when you get the feels, you're like, okay, this feels safe. This feels peaceful. This doesn't. So that, and why in the world were you were trying to sell this pair?
yeah, I got the alert for a sell. So I'm looking and whatnot. So, of course, I went to the 4-hour chart, and, it was in the sell zone of the 4-hour chart.
What time frame did you get an alert from?
I got an alert from the 15-minute.
What settings are on your simplicity?
Okay, now you're, you mean the scanner?
Yeah.
Yeah, I only have, I went ahead and moved it from the 30 to the 15-minute. So I only get 15-minute alerts. So I got that alert, a sell alert for EU. And so I went to the 4-hour chart, and I saw that, it was in the sell zone on the 4-hour chart, and then went back to the 15. And I saw where there was an arrow, but of course it moved back against the arrow the other way. So, I tend to kind of wait and see if it's going to kind of top out at the top of the sell box. I saw it start to move back down. So I went ahead and hit my 0.01 lot, and then went down toward the bottom of the box, and I dropped in 4 more sell trades. So at 0.01 lot as well. So of course it danced around, it dipped down, it wicked, and launched my other trades. So went back up or whatnot. And I said, okay, well, this thing has to fall because it's on the 4-hour chart here. I see it, it's on the 15 or whatnot. Let me just walk away from it. And like I said, it actually went down. I was in profit. Then it went back up in that range, came back down, dipped again, went back up. And then by I had forgotten that I had those trades on, to be honest with you. And so I, kind of clicked in my mind. I said, oh, let me check. And that's when I just, waited for them to drop back down and, put me in profit. And then I got out with like, 10 cent, 20 cent or something like that. because I figured it was stuck in a range or whatnot. It's probably going to be doing that, well into the evening or whatnot. And I would just get back to it, late, tonight to try to market again or whatnot and see if I can get back in if I see it, make a committed move on that sell trade.
So yes, we want the committed move on the sell trade.
Right.
We don't time tops. So I heard you say we were at, the top of the zone. I know that Uncle P has a strategy that's comparable to that. So nothing I say is meant to be in conflict of what he teaches. He's good at what he does, right? So I need to give credit where it's due, right? He's good at what he does. But if you want a fundamental good rule of thumb for trading, we don't time tops. We just don't, period. So 4-hour time frame, here we go. We're at the top of the quote unquote box, which remember, this pretty box, all it is Fibonacci ratios based off of certain time frames. It's nothing. And remember, Fibonacci, I love the people who love these numbers. And I'm totally a numbers girl. I totally geek out on it. But Fibonacci by nature has to keep increasing or decreasing based off of what price is doing. So it's very unstable. It's a very, at least in my perspective, it's a very unstable system to be saying, hey, we're at 100%, because every one of these candles was 100% at one time. And then this was 100%. It came back down, probably a 20% retracement. Sorry for my voice, but this was 100%. Now this is 100%, and it's going to be 100% if it keeps going. It's going to be 100% as it keeps going, because that's literally the nature of what Fibonacci is. So please keep that in mind. Keep in mind that this box is only fancy Fibonacci ratios. It will by nature have to keep moving, because look, I wish more people knew this. Go to simplicity, go to edit. So your box, your hot zone, okay, is based off of what time frame?
Well, I was on the 15-minute chart, and then I went up to.
I promise you, your Fibonacci box on go to your own settings. So learn this for yourself, so you know. How do I say this? This box is programmed to be the 4-hour Fibonacci zone. So basically, by nature, if price is actually moving in one direction and not consolidating, this will always be 100% if it's selling, and this will always be 100% if it's buying, because by nature this is moving, right? Do you follow what I'm saying?
I do.
So you're always, if as long as price is moving up, this is 100% of the move. This is 100% of the move. This. It all is. It's all the same thing. So try to put that in perspective, and we don't time tops. So those are my last two little moments.
Okay.
Fair enough. But you're getting there. You are getting there. So. Okay, we're going to answer one more question. If you have any others, put them in the chat as fast as you can, because then we are going to get off. I usually keep this call much shorter because we end up spending hours and hours talking in the morning. So that makes for lots of talking for the day. Melanie, I don't know if you can unmute yourself, but structure and ATR are two different things. So are you there?
Yes, I'm here. Be quiet, y'all.
Okay, so ATR is literally average true range. All that means is if I were to drag my crosshairs from, let me zoom in to get a little bit prettier picture of the candles. From here to here, that's a total of 45 candles, right?
Okay.
This is a total of 5 candles. Let's go to somewhere we can see it clearly, hopefully. This is 14 candles. So right here, if we were at the chart at this very candle where my crosshair ends, not where it starts, and I came to the chart, my ATR is pretty much going to be the equivalent of the average of the last 14 candles. So ATR just means the average trading range of whatever you have it set to. The standard setting is 14. Now there's some indicators that we have in the group that are free. You should totally download them. Another way to view it, which is not my favorite way to view it, average true range, is this. It's kind of ugly. So the period is 14. My color. There you go. This is going to tell me, wow, that got big quick. This is going to tell me in pep ets. It's always calculated funny because smart people do smart things, but right here, that the average range of this is like 28 pips per candle, right? Or 2 pips, I'm guessing, right? Ran, your phone is doing something. So it's telling me what this is at per, the average range of whatever time frame you're on. So that means on the 15-minute time frame, you'll notice this number goes way down. So let's go to 15-minute. Now, the average range of a 15-minute candle, as you can see, and the high is like, that's a pipette. That's an eighth of a pip. So 0.8 pips, right?
Okay.
Per 15-minute candle, right? That's how it's kind of calculated. This is not a really loving example. Let me see if I can't clean this up and drop on US 30, because those numbers are at least big enough for us to read. Big enough for us to read. 76. There we go. Now let's come over. So we'll come here. Let's go to the 1 minute time frame to show you. ATR is basically the average true range set to 14. So the last 14 candles on average have moved approximately 70, what is that, 70-ish pips per candle. So this candle is 15, 150 pips, right? This candle is 120 plus these ones right here, which are not very big. You take the average of these 14, that's going to give you the number. This is funky math, so we don't like this. We don't use this, but there are better oscillators that tell you the same information more accurately. So all it is, and that's it. That's the average true range. This right here is the average daily range. So that's all the candles, right? For the day,
Okay.
the weekly period, the 4-week period, and the 12-week period. So that's the difference in ATR versus ADR. And remember, ATR is only relevant to the time frame you're on. So if this is moving on average 70 pips per, that's your ATR is 70 pips. Your ATR on this is probably going to be, 200 pips or 250 pips, right? Depending on what the last 14 candles have done. Your ATR on this is going to be, 500 pips or 1,000 pips. And if we go to the day chart, your ATR is going to be the ADR. Because remember, that's the average daily range, and that's daily time frame would be the same as the average trading range because you're on the day time frame.
Okay. Yeah, you had said something in regards to, like, I think you were talking about the rules, structure. You was like, you have to have structure in ATR. It was something like that. I can't really remember exactly what it was, but that's where that question had came from.
Okay, so we were talking about how I use, or how Thomas would need to decide to manage his simplicity trades. And what I was saying was, rather than having a pip-based target and stop loss, he would need to either choose to use structure. He would need to choose to use ATR, which is using an average trading range on the pair and time frame he's trading, right? Or use a simple risk and reward equation. That's what he
Okay.
used to find consistent, duplicatable success. Because, like we mentioned, if he does just pips, every one of these pairs are worth different things per pip. They move different pips per day. That's not a duplicatable strategy long term.
Right. Okay. I got it. Thank you.
You're welcome. Thank you for your question.
No problem.
Okay, Charles, how do you get access to the trade manager currently? Our one and only Scott is kind of quasi getting his house all set up. He just moved across country. Most people move south. They moved north to a beautiful place. Beautiful, beautiful, beautiful place. So he's in the process of getting it all ready. Otherwise, currently it's only available in our group, beta testing currently. That's the only place you can get it. And not to tout his horn, but this trade manager was kind of been made with a lot of people's insight, a lot of intelligent people, giving ideas, feedback, beta testing, fixing bugs, to come up with a system that there is no trade manager that does anything like this does. So even if you don't have the manager actively managing your trades, this can help you test your theories to say, is what I'm thinking accurate, or is it, am I, a little delusional? Is this a viable thought process? Will this accumulatively get me the pips I'm wanting? So, like, for example, you have a strategy, you want to back test it for 2 to 3 weeks and see if it's any good. You come in here, you set your management settings based off of every thought process under the sun. It can scale you out. Stop loss can be based off of a billion things. It can time you in and time you out of a trade. It's like if you get stuck in consolidation, it'll knock you out of the trade versus just holding forever. It'll give you exit managers, meaning instead of getting wicked out, candles have to close to take you out. That's kind of one of my favorite haha features. I don't have enough hours or voice in the day to go over all the features, but ultimately you can use this as a tool also to help you test your strategy and say, hey, does this work? Is this valid? Is it sound? Does it follow my rules? Is there anything I can do to adjust it to make it more viable, more accurate, more profitable along the way? So it's pretty genius, but that's the only place you can get it. There are other ones. None of them are like this, though. None of them are this complex. And it's complex, so it's not going to be like, here it is, slap it on your chart, pick setting 1, 2, and 3. You got to learn stuff. You got to know the stuff, right? So, for example, with trailing stop, you can do anything from notch and channel. You can do moving averages, fractal trails, parabolic stars, chandelier, gone high and low. You can start it at specific levels. You can start it later. You can start it when you scale out. There's more. It does everything. This is stuff that most y'all don't even know. Well, too many people don't even know. There's various Ichimoku settings, which are pretty awesome. Heikinashi candles, you can use those. Again, pretty awesome. Kind of complex though on how that one works. Step by step is standard on most free managers, so that's not self-explanatory, surprisingly enough, but it's standard, I should say. Step, keep the distance, again, not self-explanatory, but it's pretty standard. Classic trail is standard, and then no trailing stop. So you've got, this is like protection on, steroids. This is literally what it is. It can protect you from so many different levels of the market, from so many different styles of trading, provided again you apply the right rules. And then the idea is you take the trade, you go on with your day, maybe you trade a little bit in the morning like myself, and for the most part I don't check my charts 56 times a day. I have too many other things to do. Like, don't get me wrong, they're still on the background. I still look if I'm home, but if I'm not working, I try my best not to be home. So completely different world. You can take a swing trade, it'll manage it based off of that time frame. It can manage it based off of higher time frames. It does everything. So, and that's where you get it, is in the Six Figure Advanced membership group. Currently it's the only place it's available. So I hope that answers your question. All right, guys, that's enough for tonight. Thank you for those of y'all who came and hung out and got a chance to kind of experience simplicity. I've got these on my desk. I am eager to come back in a couple of weeks and say, okay, of these trades, how did we do? So again, that's 9 trades, can't take them all. But if you got into one CAD pair, for example, today and it closed out, you can catch the pullback on another CAD pair in 2 days, because you have to have sound rules, right? But if I had to wager, and again, I'm not supposed to do that, we're going to come back in 2 weeks and we're going to say, okay, so we won some, we lost some, we're up on a strategy like this, maybe 300 pips. But that's 300 pips trading for an hour here and there a couple times a month. 300 pips with the right lot size is, $30,000. It's $300,000. It's $3,000. So that's what's possible, even with a system like this. So if you don't know what you're doing yet, please check all the group files. They're there. The knowledge is there. The people are there to help. And yeah, that's what I've got for tonight. So happy trading. Thank you guys all. Thank you, Charles, Melanie, Tio, and everybody else who kind of came.
Thank you, Jenny.
Thank you, Barbara. You are the most amazing person in the planet, just in case you didn't
know. Thank you, Jenny. Now I got a big smile on my face.
Thank you, Jenny.
Welcome. Thank you. Oh, hey, Lucas. How are you?
What up?
Skywalker
Hey, is that Derek?
and the Dominoes.
Hey, what's up?
Listen to that voice. It sounds so happy, Lucas. It's good to hear from you.
It's good hearing you guys too.
Yeah, are you good in trading? Are you getting your simplicity down?
Yeah, I've been writing a lot of code. It's really incredible. It's helped me see things just so much more clearly. So I've been tinkering away, and now it's time to get back in the game. I've tested quite enough. So honestly, 6 months of testing. So yeah.
Big brain stuff, Lucas. Seriously?
That's we'll see. But I'm having fun and being very productive. Yeah.
Okay, well, I'll take that. Fun and production is good. So
yes, time to make some money.
Okay, we'll make some money. Okay, you can do it.
Right.
I promise. If you ever lack the belief in yourself, just come to me. I'll give you some of mine. Okay.
Yep, I know that.
All right, deal. All right, guys. Hey, thank you. I hope you guys all have an amazing night.